Homeowner, you're in default on your home loan and the bank says that they can help. But here's the problem. Not every option that they offer is designed to completely save you from foreclosure for good. In fact, one of those so-called solutions could wreck you faster than doing nothing at all. The question is, when the pressure is on and the time is running out, will you make the right choice or will you pick the wrong one? Option one is the repayment plan. The first one you'll probably hear from the bank is the repayment plan. On the surface, it sounds very reasonable. The bank takes what you owe, they divide it up, and they spread it out over the next several months so you can catch up. You make a normal monthly payment plus an extra amount to cover the past due balance. Sounds simple enough, right? Sure, but here's the thing. If you're only a month or two behind and your income is steady, it can work great. The extra payment might be tight, but it's manageable. The trouble comes when you're 90 days or more behind. That extra amount suddenly becomes massive, hundreds or even thousands on top of your regular mortgage. So yes, a repayment plan can be a fix, but only if the math works from day one. If it doesn't, it's just a slow slide back into trouble. And then there's the forbearance option. This one catches a lot of people because it really feels like relief. What happens is the bank pauses your payments for a set of period of time. What happens when it ends? Because that's where the trap is. When forbearance is over, you will owe all those missed payments, either in one lump sum, cramped into a repayment plan, or rolled into a modification. And if you don't have a guaranteed way to catch up, you're just giving yourself a bigger hole to climb out of. I've seen homeowners finish forbearances owing tens of thousands more, with foreclosure moving even faster. This one feels safe in the moment, but for most people that are already deep in default, it's the option that ends their chances for good. And now let's look at the one that, when it's done right, can actually be your lifeline, and that is the loan modification. With a loan modification, the bank changes the terms of your mortgage. They may even lower your interest rate and extend your loan term or adjust your monthly payment so it's affordable again. If the numbers are right and you can afford the new payment, this can stop foreclosure and keep you in your home. But don't mistake this for charity. The bank might roll late fees and legal costs into the balance. Getting approved isn't quick at all. It can take months you may not have. That's why the key is this. If the new payment is truly sustainable long term, a loan modification can be the best option you have. But if it's not, you just trade one problem for another. Look, none of the solutions are perfect, and some may be good, others not so much. The point is that you must look deeply into each one and decide which one is best for you. And of course, if you need some help with this, I offer free consultation via Zoom. Let's look at option number 4, the reinstatement. The reinstatement is the cleanest fix, and for most people, the hardest to pull off. This means that you pay everything you owe all at once. The missed payments, the late fees, the legal costs, every penny. You hand over that check and instantly you're current on your home loan and foreclosure stops. Sounds great, right? But here's the reality. Most people that I've spoken to that are in default don't have that kind of cash sitting around. Otherwise, you just drained your resources to buy a few months before the problem comes back again. So please be mindful here. If you are not able to continue with the loan payments for the long term, you just handed more money to the lender, okay? Now let's look at option 5. Option 5 is refinancing. Refinancing is swapping your current mortgage for a new one, ideally with better terms. In theory, it could lower your payment, it could reset your loan, and it could help you catch up. But the problem is that once you're in default, especially if there's a list pending filed, most lenders won't even consider giving you a new loan. At this stage, refinancing is more of a distraction than a solution. Chasing it can burn weeks you simply don't really have. Option 6 is a short sale. This is in the event that your total debt is higher than the value of your home. A short sale is selling your home for less than you owe, with the bank's permission though. It stops the foreclosure and it can be less damaging to your credit than a full foreclosure. But let's be clear, there's no equity for you to walk away with. The sale price isn't enough to pay off the loan, so you leave with nothing in your pocket. Some banks present it as part of their loss mitigation options, like it's a way to save your home. It's not. If your goal is to keep the house, this won't do it. But if staying isn't realistic, a short sale can at least let you walk away without the full legal credit damage of foreclosure. And in some instances, you might be able to get some money from the bank for a relocation. And option 7 is selling before foreclosure. Selling the house before foreclosure is the option that too many people wait too long to consider. If you have equity, you can sell, pay off the mortgage, and walk away without the foreclosure stain on your record. Because the longer you wait to sell, the more your equity disappears into late fees, legal costs, and bank expenses. If keeping the home is no longer realistic, selling before foreclosure can be the fastest way to protect what's yours and move forward on your terms. If there's equity in the house, considering selling the house early on is highly recommended. This is not giving up. This is about taking what is yours before the bank makes the decision for you. And they will make the decision for you sooner or later. And now for the big reveal, the best and worst. So what's the best option for most people deep in default? Obviously, it's the loan modification, but only when the payment is truly affordable for the long term. And when it's done right, it's the closest thing to hitting the reset button. And the worst solution is the forbearance, because it feels safe today, but it's stacking up a bill that can crush you later. And by the time it ends, you might find yourself owing more than you did before. You will have less time, and the foreclosure will be closer than you are prepared for. But here's the thing. Even if you do pick the best option for your personal circumstances, there's one thing that can ruin it before it even has a chance to work. And it's not even the bank. It's you. So many of my clients regret this. Telling yourself, I'll pay next month, that thought feels harmless. But it's the fastest way to run out of time without even realizing it. In the next video, I'll show you exactly why that mindset can cost you your home. See you there.